What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and how to get you access to high limit credit funding. If you're new to our channel or if you've been checking out our content for a while, definitely make sure to hit that subscribe button. Otherwise, you could like, share, or comment down below. So in today's video, I wanted to recap some of the information that we covered in the video we dropped a couple days ago about the Biden administration's plan to reform the credit reporting agencies. Now, I was going through the comments and a lot of you guys made a lot of great points that I wanted to cover. So at a high level, the Biden administration plans to convert the current private credit reporting agency, so that's Experian, TransUnion, and Equifax, to a public credit registry that will be managed by the CFPB, which is the Consumer Financial Protection Bureau. If anyone wants to know the details of this particular plan, I've posted a link to the PDF, but at a high level, there's a couple major components. Number one is changing the amount of time that negative and derogatory information can report on your credit from 7 years to 4 years. Also, being able to discount certain information in the calculation of your credit report, specifically medical debt, as well as other types of loans from predatory types of lenders, as well as allowing student loans to be discharged in a bankruptcy. So let's go back to the time that negative information can report on your credit report. Now, this is something that I think a lot of us agree should be reformed because 7 years is quite a long time for negative information to be hanging on to your credit report because it has a detrimental impact on the trajectory of your financial well-being, preventing you from doing major life changes such as purchasing a vehicle, getting loans for a business, or even purchasing a home. So having that negative information actually puts a lot of pressure on consumers because the margin of error is very small. One missed payment can stay on your credit profile for up to 7 years. So that's going to have a huge impact. And another thing too is, does that one payment necessarily need to be weighted so heavily that, let's say if you missed the payment 6 years ago, does that have any bearing on your ability to repay or your credit worthiness today? I think too much emphasis is put on information that may not be a true reflection of exactly how you are today when it comes to managing and handling credit and debt. So in terms of the 7-year period, we can all agree that that definitely needs to be changed. But how long is actually long enough? Because is 4 years really long enough? One good point that a subscriber made was the fact that if, let's say, negative information is only reporting for 4 years, doesn't that de-incentivize people who may not be the best credit worthy to not repay their debts because they know after 4 years it's going to go away? So lenders are definitely going to have to respond and adjust to that. So lenders may actually make qualifying for different types of credit much harder because they know that they're only going to get that 4-year window to really see if there's any type of negative information on that particular borrower. And I mean, 4 years and 7 years are definitely different. 4 years is a much shorter window. And actually, 4 years can fly by. So let's say someone borrowed money, defaulted on it, and decided not to repay it. All they would have to do is wait out 4 years. That information falls off. And then it's like they get a clean slate all over again. Now, I think financial institutions would definitely adjust to that by making the underwriting criteria a lot harder. So that's one of the negative things that I could see from changing it from 7 years to 4 years is because you're de-incentivizing people to have good financial behavior if they know that, okay, all I got to do is wait 4 years and this information is going to fall off. So that's one of the bad things I can see. But is 7 years appropriate, or what should the number of years be for negative information to report on a credit profile? Now, I think 5 years is probably more feasible and more realistic because, again, 5 years is enough time for someone's financial situation to change, their behaviors or patterns to change, or even for someone to realize the importance of having credit. Because one of the things that I actually learned, and I learned the hard way, the importance of credit is running into hurdles as I try to, progress through life, whether that's going to finance a vehicle or get an apartment. I realized the barrier that having bad credit actually presented. So I kind of, learned the hard way, got stung, and that really changed my whole attitude about credit and realizing the importance of credit and the setback it could actually present to you if you do have bad credit. So I think, 4 years might be too short of a window to really assess someone's credit worthiness from a lender's perspective. I think 5 years is better than 4 years because it's just a little bit more time for the lender to assess that type of data. And it's not as long as 7 years. I feel like 7 years is way too long because you're definitely at a different stage in life every 7 years or so, right? You're not going to be the same type of person you were, hopefully, 7 years ago than you are today. I think 7 years is too long of a window to have, but what's the right length of time that will provide lenders with enough data on you to assess your credit worthiness, but also not prevent you from being able to make the moves that you need to make? Another downside of having the government operate a public credit registry is your ability to dispute negative information, right? Right now, you could submit disputes to the credit reporting agencies, but with the government agency, it's going to be a lot harder for you to dispute that information. Right now, the credit reporting agency doesn't have the bandwidth or the capacity to handle all these types of disputes. I think if the CFPB is managing the public credit registry, it's just going to be a lot harder to be able to dispute information, and it's just going to take a longer time because right now we're disputing with private entities. But if you're disputing with a government entity, what's the process for that? And all of those disputes are going to be documented. So it's not like you can, kind of backtrack to a certain degree. Once you file a dispute, that's going to be logged on your record. So imagine the credit dispute process being very long and drawn out. And what's the mechanism that you're going to go about disputing? Are you going to have to go to court to dispute things? Like, what is that process actually going to look like? So I think that's one good point about not having the CFPB manage your credit reports, is because the process might be very, very intensive, as well as, what say are you actually going to have in disputing this type of information? Is the government going to be more of like an intermediary between the creditor and the borrower? What's their role actually going to be? And what's the process going to be for disputing? What is that timeline going to look like? So I think having a little bit more details about that would give you a better idea if this is actually a good idea. But I think just from the way governments operate, usually they're a lot slower than they are in the private sector. So in terms of disputing negative information, I don't think it's going to be a benefit. Now, I think one of the overall themes was that people just don't want the government in their business, because at the end of the day, the government has your credit data, your credit information. They have a lot of information on you, like where you go to shop, where you spend your money at, where you're transacting. So it just gives the government a little bit more access to your personal information. Not that they don't already have your information, because, if you're doing business or working a job, you're filing your tax returns, but having your credit data is just much more granular information. And who knows what they're actually going to be doing with that information. Now, right now, private credit reporting agencies, they sell information, share your information with different businesses and things like that. But in the hands of the government, what are they actually doing with it? Are they overstepping their boundaries with that? Is that an invasion of privacy? So that's probably one of the biggest points that I saw just from going through the comment section, is just giving too much access to your information to the federal government. Now, I think the majority of us are in agreement that reform needs to take place when it comes to the credit reporting system. Now, how we actually go about that is where some of the differences start to begin. Now, one thing I can say about the current credit reporting system is that it definitely does a disservice to otherwise credit-worthy borrowers. For example, if you're someone who made a mistake when you were 19, you missed a payment, but then you got a job, you start working for a couple years, and all your other accounts on your credit are reporting positively, but you just might have this one old account that's still dragging you down, preventing you from doing things. I think a lot of people fall through the gaps there because, again, the credit reporting system is backwards looking. It's looking at data as far back as 7 years to make a credit decision today. And I think that's one of the biggest flaws with the current credit system. Now, how we actually go about that, I don't know what the right answer is. Now, some people have proposed, well, why don't we just change the current credit reporting agencies to switch from 7 years to 4 years? Now, I think that would be a much more feasible path to go, since, these credit reporting agencies have been around for decades, and I don't think they're going to go anywhere. But I think if we're able to reform them how they are now, instead of having the CFPB and the government get involved, might be a better way around it. Now, I understand people may have different opinions on the right route, whether it's a public credit registry, whether we keep things the same. But I think at the end of the day, the way the current credit system is right now, it rewards people who are financially responsible and financially stable. So if you have higher income, you're more likely to pay your bills on time. If you have more stability, you're going to pay your bills on time. Whereas, if you're living on the margins, living paycheck to paycheck, you're at a much higher percentage of defaulting or paying something late, and then just repeating the cycle of having negative information hold you back in terms of being able to get access to good neighborhoods through purchasing a mortgage or being able to qualify for a home. So right now, the way things are, it's going to reward people who are financially stable and financially literate and people who actually pay their bills on time. Now, I'm not making any excuses for anyone who may have made late payments or don't pay their bills, right? Because the way it is right now, it's very objective, right? You either pay your bills on time or you don't. And that gets factored into mathematical equation, which is your credit score. And your credit score will determine whether or not you get access to loans and lines of credit and financial products. So I don't think there's anything wrong with the way that is set up. But one thing you have to remember, right? And I know some people may be upset with people who have a different opinion, but if you're someone who is not being able to take advantage or you're not seeing any benefits from the current credit system, you're probably more susceptible of, having some type of intervention, even if that is a government agency stepping in to level the playing field in a sense for people who it's actually working for people who pay their bills on time, people who are financially responsible. You're actually getting rewarded with the current system because the current credit system rewards financial stability and good credit behavior. Because if a financial institution is giving you money, they want to know that you're going to pay it back and you're not going to cause a loss to them. So it actually is rewarding to have good financial behavior. But if you made a mistake in the past, how long should you suffer for that? How long should you have to pay high interest rates? How long should you be denied credit for? I think that's one of the biggest things we have to figure out with the current system. Now, whether it's a public credit registry or keep things the way they are and just change some of the rules, that's left up for discussion. But that's all I wanted to cover in today's video. Let me know your comments and questions right down below. And until next time, take it easy and we'll talk to you soon. Peace.